And welcome to week number 24. We had 2 weeks back to back of pretty much inactivity in the market. It was quite boring. You had to play the ranges. For instance, GBUSD didn't really move very much since the 12th or 13th of May. More or less EURUSD the same, kind of stood range bound under the 122.40 level, continue doing nothing. And most market pretty much followed that. This is ahead of the summertime, where you find that market has got no theme and really is just about liquidity searches and squeezing people out of their positions. Looking at the CFTC data last week, EURUSD longs did scale back a little bit, which is surprising because they happened ahead of the ECB, which did come out dovish, so probably we had a little bit more reduction next week. And GB longs added a little bit in a week where they thought maybe that the 21st of June deadline for reopening the UK economy might go ahead. Now there is in doldrums. I'm not sure if these whole longs will hold either, but on the rest of the CFTC data didn't really show us a lot of movement, really quite sanguine. What we're seeing is really a reduction in open interest on some of these positions, and that is reflective of that market has got no particular sentiment right now. It is a little bit slower and waiting just really for some themes to come through. The inflation expectations here have been dipping, kind of topped out in the mid-late May and kind of start climbing down further. Basically, this market is saying, or the bond market is saying, that inflation is transitory and they're not too worried going forward. They might start picking up at some point, but for now it's dipping. I've overlaid this with a couple of charts, not to make it look too busy, but most of the yen pairs, so CAD JPY, Euro JPY, GBP JPY, and we can see they're both beautifully converging with that as well. So I expect all of these yen pairs to settle a little bit lower, give or take, some a bit more volatile. So in GB JPY you could see volatility pick up and then push down another 100 pips, but with the other pairs maybe you should be limited 50-60 pips just to really reflect the inflation expectation narrative and also where yields are headed. Now, talking about yields, next week we have the FOMC. And the risk is that the Fed will start talking tapering. It will start talking about how economy is doing good and the inflation are becoming worrying. This in turn could, typing the wrong thing, I'm looking for the US 10-year yield. This in turn could put a bottom or a medium-term bottom for the US 10-year yields, which will have several indications and reflecting several other FX pairs, which I will explain in a moment. But basically what we're all expecting throughout the summer and spring is that this picks up and starts pushing towards 2. And a lot of positions been building long, and they're starting to get squeezed out for last week. What that really means is that that trade idea isn't dead. I'm still expecting it to go high. It's just obviously the weaker hands are getting pushed out the market. Now, ahead of the FOMC meeting, which is due on Wednesday next week, the 16th of June, expectation is that all of this could start moving higher because inflation has been printing really hot numbers last week. That could mean that yields start picking up as well. And by the looks of it, the rundown is maybe has run its course. Now, you don't want to jump in there and start catching falling knives, but what you want to pay attention to is before the meeting or around the meeting what the yields do. If they do start putting a bottoming pattern in or start moving a little bit more up into that range more aggressively, then that means we're probably done on the downside. Now, the couple of pairs that will react to that are mostly of the CHF pairs. So I'm looking at Euro CHF as one of the pairs that could start bottoming next week. I'm actually looking at the charts on its own, don't need the overlay just now. So let me bring this up so we can have a quick look at that, because I believe that's one of the pairs that can start seeing fortunes turn higher again. So I'm expecting about level 180.20, 180.30 around here to see market push it as much low as it could and then start building back up again. Mind you, this is not a full reversal from a technical perspective, might look like, but from a macro perspective, there's really a lot of reasons to believe that this big move higher, still has legs higher. It's just really a matter of timing when this will happen, and timing this thing could probably come closer with next week's FOMC turning the tide on the yields, and that also means it could turn the tide on EURCHF higher. Same thing with other pairs like GBCHF, expecting the same. So we feel like the downside here is starting to get exhausted. Maybe one last dip as a fake out, and then start attacking these highs and even higher. And that's been pretty much the call for several months now. Really, market is just boxing out ranges, taking up liquidity before it starts making that move higher. It's just one of those trades that starts developing for a longer period of time rather than a shorter period of time. And let's have a quick look at USD-CHF as well. I kind of like this on the long side. I feel like the downside is kind of exhausted again. Same thing with yields. US yields starting to find a bit of a bottom. Market starts selling bonds again, and that could push all of these things up even back to its peak about 95 cents. That's something I like to keep an eye on, to start legging it as a swing trade next week. I will communicate it quite live in my own trading room, which I operate. And again, when I have these bigger ideas and things don't quite turn out, I'll communicate there as well to pull out of a trade for the medium term and start re-engaging later. So it's really being aware of what's driving market in the moment, just to get into better prices, specifically if you want to trade trends. That's one thing I want to talk about. Another thing I want to talk about is a phenomenon about the Dow Jones, where it's got a very interesting pattern, and that pattern just came along on Friday again. So let me pick this up. So looking at the Dow Jones here, which is the CFD contract, and there's this one pattern which has got quite a good high probability. I'm flipping here through my notes, see if I can find what the probability was on this. And yeah, it's got over 80% probability, and the pattern is this. Actually, the last time it happened as well, I put it out on a video, which was, I believe, the 19th of March, was it? Yeah, 19th of March. But it happens every now and again. Basically, the pattern is, on Thursday, you have a range, which is the top. This is the daily count, by the way, which would be the top, and this was the bottom. On Friday, for whatever reason, market cannot move beyond Thursday's top. So it means that Thursday's top is untouched on a Friday. Now, this is where the pattern starts. Once you see the pattern forming, Friday is lower on Thursday. On the Dow Jones, you 80% chance that by Monday or Tuesday, this whole move starts getting reversed. Now, it's not a lot. Looking at that, it's not a lot, probably about 1%, depending where Dow Jones would open on a Monday. But what you can be certain about is, or near to certain, is that this whole move will be gobbled up again quite early in the week. So you'll be looking for longs starting next week to start capturing some of these highs. It could even leg even higher, but really what you're looking out for is have that sort of a short-term spike or move higher, which is usually quite momentous as well. So that's something you want to keep in mind. And I don't think market will wait until FOMC. I really think that move will happen by Monday or Tuesday. So something to keep an eye on your Dow Jones to start buying that dip there and start attacking 3,400, about 70 area, just really to take off Thursday's high. So this is one thing we covered. There's a couple of pairs I like to look at where things have not shifted, but things are starting to become very, very obvious in terms of what's happening here. So EURUSD again, we had pretty much since May, nothing has happened. So beginning of May, we started at around these levels here. So end of April, beginning of May, we started around 121 level, and now it's 2 months later, and pretty much we're still where it is. There's two things starting to emerge. One thing is where you think that those people who are long starting to get squeezed out. If they start getting squeezed out, 118 is on the cards, because that's where usually those bullish bets started coming in the start of April. But if they start manage to get back above it, I would be really keen to watch these levels. So it is not a concrete call on what will happen, but what is really important right now for this pair is obviously the 122 level to start regaining that. As long as you can see that EURUSD stays below this trading range under 122, which at this point is now about 100 pips away. When I talked about it on Thursday and Friday, was still a bit higher, so probably a bit more lucrative. Be that as it may, as long as we stay on a 122 level, I'm fairly confident that this is a short squeeze and we should be seeing a dive towards 118. A short squeeze has got very little logical and macro driven factors. It's really of matter. There's no concrete theme right now. There is no need for aggressively entering any position, and so sort of liquidity search in the market takes a life on its own and starts squeezing people who are on the long side of EURUSD and start smashing levels lower. As long as we're under 122, once we start threatening above 122 again, I believe we will start settling in the higher ranges. Something I expected the last couple of weeks to happen, but it just kind of played about and did not. Now it's easier to get bearish once you hit support, where usually the risk and reward should be the opposite. But mind you, if this really is a short squeeze, we will start seeing these levels give away, and you can make a lot of money on the downside there, exploiting that, as long as 122 holds. Quite important. Another thing I like to show you is a very interesting phenomenon again, and again a bit more quantitative research on my side. So FOMC meeting obviously up next week, and I'll see what happens after every FOMC meeting. So you don't necessarily need to be able to predict what happens during or before the FOMC meeting, but once the FOMC meeting is through, you see a pattern that starts to emerge pretty much every single time. So I take you back a couple last dates. 28th of April. I'm going to just scroll over it, and I believe you will see the pattern emerge on your own because it's so obvious. So 28th of April was the last meeting, which was at this candle here. So we had this big move up, and see what happened in the following days, right? I'm not saying nothing. I'm just scrolling through these, and you can make your mind up what that means. 17th of March. So 17th of March was the one before it. We had big bullish candle. See what happened after it, right? And 27th of January. Where are we? 27th of January here. So you had this bearish move down, and see what happened in a couple of days after that. 16th of December, I believe maybe market was a little bit different ahead of the new year. So 16th we had a good 2 bullish days retracement, and then November was in the middle of the election, which kind of knocks out any calculation out. But if you take it back a bit further, I'm still confident we see that sort of pattern. So the last time before that was 16th of September, which was around here. So we had a down day, and we'll see what the other 2 days done after that. So I think it becomes pretty obvious that every time you see a FOMC move, Thursday and Friday reverses it. It's just like, it doesn't matter, it happened. So it doesn't look like the main move happens during the FOMC. The main move, or the easier move to predict, is the one that happens after the FOMC meeting, which is basically the fade, whatever price action there was. I'm gonna like to zoom down back to the 28th of April, because that's when I talked about it last time. It kind of gave good momentum, and a lot of people started fading their move, and it came good really well. So 28th of April again, on the Wednesday, you had this ferocious move. It's a really big high move. So we started the morning and then ended the day nearly 70-80 pips high, and that's quite a big move for EURUSD on a daily basis. Quite max ATR, even a little bit more. So you see these moves, and everybody starts thinking, oh my god, this is pushing higher. People start talking about EURUSD 125, and guess what happened the following 2 days after that? Thursday put in the top, and Friday just delivered pain. Just gobbled up the entire zone there. I'm expecting the same thing happening next week as well. So wherever we will land with EURUSD, either will be higher, either we will be lower. I will be focusing on fading it on Thursday and Friday, because that's where it seems to be the money traders. That seems to be the easier read. So we discussed 3 things. Next week, keep a close eye on yields, because they will be moving CHF pairs. He might even get a bottom. Hard to tell yet, but it's definitely something to keep an eye on. Another thing is your Dow Jones. You have that pattern emerging where on Friday you can't take out the Thursday highs. You start thinking long on Monday and Tuesday, and EURUSD, you're probabilistic more likely to make money fading the FOMC move on a Thursday or Friday. There's loads of other data coming through the rest of the week as well. So you've got some data through from Pound, Bailey speaking. You have retail sales. I think there was a couple of other things relating to the pound coming out next week. They were quite important. Can't seem to find it here just now. You have employment data, which is quite important for RBA as well, and how AUD will react. All of these ones are not quite predictable in this environment, because we had this hot CPI print from US last week, and now we have the CPI print. This is the one I was looking for. They will likely jolt GBP as well. My base case right now is that GBP USD will be quite pivotal around this level. they will be quite pivotal around this level. So that means if GBP/USD can trade under this level, I think it will start taking out these lows. But if it starts moving above this zone, it will move above it. This zone is quite important to me because it was right after the US CPI, and the London fixes around after the CPI are quite important. From a technical perspective, I mean, look at it. It looks like it did nothing, just playing the range, frustrating everyone. Now we came to a point where we're probably going to see some sort of a breakout. If a breakout happens, this level hold is quite pivotal to explore lower levels. There was a gap in the charts at around 138 at some point several weeks ago, and I don't think we've quite tagged that yet, so we could still see it tagged. I'm trying to find this on the charts. Let's see if I can find it now. I think it was around these lower levels. I had it marked out earlier, now I seem not to find it. It was, I believe, somewhere between 138 or so. There was still a gap from your Friday Sunday gap, and I think it still could explore that if things start breaking down. Again, a really well formulated range in here, which could start exploding either way, but this will be a key level to play it against in the coming weeks. As we get towards the end of June as well, you find that market finds a little bit more momentum. So you will see some momentum breakouts. You don't see these low volatility levels holding for too long. So you definitely want to be prepared for either ways of a good strong break. It's good to have a little bit of a bias, but don't get married to it. So if it starts breaking up above it and the whole bearish USD trade starts emerging again, definitely go for it, because there will be loads of money to be made. This saying that, we also have the BOE coming up in another 2 weeks, which will certainly be another big move for GBP/USD. So don't exhaust your pockets too early in the week, because there's a couple of good swing trades still coming up towards the back end of the week in 2 weeks coming, where you can definitely make some money out of that, because the moves will be there. That's all I wanted to cover. Quite a little bit longer video because there was a pause for the last 2 weeks, but at least we have a little bit more clarity on what we want to attack. We have really good statistics to work with next week, and there's definitely something to churn out. Thanks very much. That's all I wanted to say.